All right, here we go. What is up, Crypto Junkies? Jay here, and welcome to a new day. Welcome to a new quick charting session. Just pop a link here in our Discord. 5,300 members strong now. So if you want to join us, it's free. It'll be the first link in the description. Discord is I love Discord. So much better than Telegram. A little bit tired here. We're live. So today I want to focus on just a little bit of crypto news. We're gonna, Bitcoin hasn't really disappointing weekly close, hasn't really done much, so we'll quickly touch on that. And then I want to spend more time with gold and silver because I've been plotting some more lines over the last day or so. And yeah, I just want to kind of focus on that. Like, I love the fact that there's so much data for gold and silver. Like, there's lines going back like 10 years. Like the support that we're at right now with silver is like a 10-year-old line. It's just crazy. You don't really, obviously you don't get that with crypto. So I think that's one of the benefits of at least spending time charting something that's got way more data, is that gives you way more insight, right? Like, you just get to see the significance of something that maybe you don't fully understand with crypto, and you get to see that that significance at a much bigger scale. And I think that's really an important thing, is that a lot of times, people coming into crypto, they got involved in ICOs, they got involved maybe in lending stuff like a lot of us did, and they're like, oh, well, lost all my money. That was kind of stupid. Well, what now? Well, okay, let me learn trading. And then you kind of start reading through a bunch of books, and you learn Wyckoff method or Elliott wave or following TD because you listen to Tone Vays. And understand that learning itself, and learning essentially is, you're just learning a point of observation. You're just learning a bunch of things that this guy, is important, and this guy is telling you, or this girl is telling you is important, but you don't necessarily know why yet. So the learning process in the beginning is just copycatting and duplication, because, well, he's saying it, and this is important, and he drew the line like this, so, okay, I'll copy that. And you don't really understand it until much later on, and it just, through application, then it starts to actually become something that you're doing yourself, and it's not a duplication or copycat process anymore. So I hope that makes sense. But like, learning itself, especially with data like this, I'm fascinated with it, right? Which is why I've stuck around. I don't know if in the beginning my motives were more money driven when I first got into crypto, but now I've fallen in love with the game, guys, essentially. And so in the long run, if I make a bunch of money, cool. If I don't, and I'm like homeless, cool. I don't really care. Like, I've fallen in love with the game of the markets and of the world economy, essentially. And so that came out of all of this, which I think is great. And so, hopefully I can help you guys maybe understand some stuff, learn some stuff, and we'll have some fun together in the process. But I'm mostly in the Discord. If you do want more action, you like what you see here, stick around, and it's free to join. Okay, over 5,300 people now. So yeah, let's talk news really quick. Nothing too big has hit. We've got China cracking down, arresting 20 people that were in some multi-million-dollar scam, allegedly. Okay, so that's some good news. On the bad news front, we've got somebody who started compiling a list of all of the crypto robberies, and there's about 18 to 21 that have been now publicly filed and talked about. So you notice something too with my channel is I don't really show wallets anymore. I don't talk about how much money I've got, how much money I've made. Now, that's a double-ended sword, because in the hype fest world of crypto, where everybody's playing the who's got the biggest dick contest, going around and parading your gains like, I just made this much money, does really well for your YouTube view counts, which you notice ours are not that great. It does really great for your YouTube view counts, but it does really bad for your personal security. And I'm the kind of guy to where I don't want a ton of attention on me. I don't really, because that just kind of fuels your ego, right? And then you start getting wrapped up in it more and more, and you're invited to think you're more and more important, and before you know it, you're just an asshole. And I've already been an asshole in my life, and I don't really want to do that again. So at this point in my life, I'm really happy with just being low key. And so I don't want to have to like hire security guards or anything like that, because I'm, you know, some of this stuff is so stupid. Like, you host a meetup in your neighborhood because it's close to your house and you know the coffee shop already, or you know the venue already. Think of how stupid that is. And you're posting it all over your social media, which you have to, right? Hey, great meetup last night. Hope we have more people next week. And you're meeting with people and being super intimate. And what are you talking about? You're talking about crypto. So you'll be more inclined to give away way more information about yourself during these meetups than you probably should. And then what do you know? You're opening yourself up to this risk. So the minute that you got crazy looking Russian guys with their arms crossed looking pissed off in the back of the room, you should probably stop the meetups, right? You should probably put a fork in it and give that up. So again, you know, I want to share too just as much as the next guy, but it really does put us all in a difficult situation, because like I would love to be sharing how much made off of this trade or that trade, but honestly, I don't really share shit, and a lot of it has to do with that, right? So anyway, that's more important, is to get you guys up to speed on understanding the markets and making your plays and making your moves, right? So that's a piece of news. Oh, and the third piece I wanted to touch on is Bancor. So right when I'm in talks with Bancor to understand more about their platform, I reread through their white paper recently twice, and looking to leverage them for the community, because they focus on longer tail projects, and I want to do some things with the community to get them involved, and I want to kind of tokenize some of the aspects, right? Like, I'd love for people to just be using a crypto junkie coin to buy merch, or to be upgrading for future products and, you know, things that we offer down the road. I would love to just be doing that, right? And kind of keep it all in the family, as they say. But there's obviously some risks that are involved with that. So they were hacked. They got away with 12.5 million ETH. They're working with exchanges right now to attempt to try and freeze that on a centralized exchanges. And so some information has come out too, because Bancor is a decentralized exchange and it touts itself as that, but it does have some centralized aspects. And you can make fun of it all you want, but they were able to freeze the BNT or Bancor coin that was taken, which was another, what was it, 10 million? So they were able to stop another 10 million theft due to just like a backup mechanism, essentially, that they could, they've got like this overriding thing that they can freeze the funds in some sort of way, which, you know, they're catching a ton of flack on that from maximalists and people just essentially who are salty and want to talk shit. So they're complaining and saying, oh, great, so it's not decentralized. I don't think that we're ready for a truly decentralized exchange. There's proof all around us. Another smart contract vulnerability. Hey, who would have thought, right? We're not there yet. So you can talk shit all you want and say, no, everything should be decentralized. Great, but if the tech isn't there, then we just all look like assholes who are losing all of our money right and left to people who don't care, right? So I'm all for that argument too, but it's just really masturbatory when the tech or the smarts aren't there and there's all these vulnerabilities and we're all losing money. So I don't know what would be worse at this point, like to just, you know, say, okay, we're not going to build in that feature, and then another 10 million would have been lost, which, you know, negatively affects the network in a huge way, which puts the entire network at risk, all those projects at risk. Or we just kind of accept that, yeah, things are kind of decentralized, but there's some centralized pieces. Maybe we just shouldn't call it decentralized. Sort of. Maybe we should just call it sort of decentralized. I don't know. Let me know what you guys think in the comments. But let's get into some charting, huh? So, super disappointing weekly close. Look at this. It just closed yesterday. I posted this in the Discord too. Fell short. And so this week, we're in the same scenario. Same thing I've talked about for like the last 4 or 5 days. Nothing's really changed. RSI might change a little bit here or there. MACD changes a little bit here or there. I haven't even looked at smaller time frames. I don't really care. It's the same game, right? So if that's the weekly, we drop down to an hourly. And what do you know? it's the same thing, right? So we're literally just tracking laterally at this point, tiptoeing in and around, just weaving around this thing like a DNA strand on this this significance line, right? So till we do something, right? It's going to continue to be played like this. So we're interacting with this line a lot on, obviously on smaller time frames. Even on bigger time frames, we're interacting with it quite a bit. And what do you guys know? The more we interact with a line, the more likely we will either break up or break down. That's just how it is. A line can only support for so long the weight of the price action, my friends. So yeah, that, and then another small little change up is we're actually starting to break through the 4 hour. Well, kinda. On the 4 hour, we're starting to break through the 200 EMA. So it supported us a lot, and it seems like we're kind of starting to break through that, break below that. So that is obviously not a good sign. Okay, bearish. So nothing's changed. The same game is there. So we need to close above this. We need to break it back above, close above it on the daily, on the bigger time frames, and that's when people will really start to get excited. I think most people won't get excited until we're over 7,000 cleared and closed daily, right? Okay. What else did I want to show you? Oh yeah, let's get into gold and silver, huh? So silver's touching down on a, and this being supported by a line that's like 10 years old. Crazy. But let's talk gold-silver ratio. I like this a lot. I just found this yesterday. And so I'm on the monthly here, and there's a ton of significance that I'll show you in some breadcrumbs. But look at this line. Starting at the oldest line, this goes back to 2012. And I haven't gone back further than that. It might be even longer, which would be crazy. But this is a significance line or channel here. And you see, with all these lines that I've got, they're creating like this fan effect. And these are all, so it's just like a pitchfork, right? And these are all creating different support lines that the price action is interacting with. But let me quickly tell you what this is. So gold-silver ratio, this is what this means is, so okay, we're at, what's our current price is 78,127. So that means 78 ounces of silver it takes to buy 1 gram of gold. I think that's how it works, right? Hold on, let me just go back here to make sure that I'm saying this correctly. Boo, boo, boo. Let's see. Gold ratio represents how many ounces of silver it takes to buy, 1 ounce of gold. Okay, so 78 ounces of silver to 1 ounce of gold. There we go. Let's go back to the technicals. I like this little technicals thing, especially if you're new to TA and you don't really know what's going on. It at least gives you something that you can kind of get excited about, right? So on the daily and monthly, strong buy. On the weekly, sell. And I don't know what the smaller time frames are, but it doesn't matter. Here's why I'm showing you all this, okay? Is because it is at 78. It's dipping up into these higher numbers. And somebody had posted, what triggered this is I saw a post that somebody said every time it hits to 80 and above, there's usually, well, not usually, like all throughout time, but this year in 2018, so far when it's done that, we saw significant increase in price action, and I'm not going to agree with that. I'm going to go ahead and disagree with that personally. And then historically, it really didn't mean that either. So I went back and looked at all these points. Like on the monthly, you're not getting much data points, but on the smaller time frames, I went back and looked, and there wasn't a correlation to. So here's the boxes. So let's jump on a smaller time frame. Let's jump on weekly. Yeah, so here's the box here. It's basically the zone from 129 to 430, I think it is, right? No. Oh, the box moved. Sorry, the box moved. Here's the correct zone. So 22 to 52. Yeah, there it is. But it didn't correlate. So, okay, so while the gold to silver ratio was above 80, then we should have saw, right? They're claiming that there was significant price action on gold, and that there was, bull run on gold, and I just not really seeing that. So I don't agree with that, but I want to show you some significance here. So, all right, so we're on now the weekly. So now we've got some more significant lines and channels. So this one started in 2016, July 2016. Huge point right here. And I fanned out two, one ending here and one ending here. And so again, we're looking for multiple touch points through here, at least 3 on these, but you usually want more on these channels, right? And then here's the upper right here. So there's 2 zones that are at play here. Is you've got your horizontal and then you've got your diagonal lines. So we're really operating in from this one here. Let me just move this up. I believe I still got it. Yeah, snapped magnetically. Okay. So operating from this is kind of the bottom and this as the moving top. So again, looking at price action as we go, as long as everything else, like this is just another piece of confluence, right? So what we can expect is that we're going to kind of be bouncing from this line and this line here as we continue to go. Yeah, right there. Okay, so and then we've got a smaller one that was just broken below here on the weekly. This becomes even more significant on the daily. Let's just look at this really quick. And what do you know? It kind of coincides with this breakdown that we saw. So we broke below that and dipped down onto this second support channel or line, right? But it's all in this bigger. It's all in this bigger piece. It's all in this bigger groove here, right? And then inside of that, now let's look at our horizontals. And what's cool about this is a lot of this is just perfectly laying down on fib lines. I don't think I did it on this one, but I did it on gold and silver. So I won't do it on here. I'll do it on gold and silver charts specifically. So yeah, support here, and we're kind of, if you look the same way that we're in this ascending wedge, or excuse me, ascending channel, we also have similar happening. Here's our top. Here's our bottom. So we've kind of got our own little horizontal channel happening as well. Let me just highlight those for you. See those nice and thick now, right? And then if we wanted to get more specific, it's actually very recently like this. So on a bigger time frame, since April, it has 100% been operating from top to bottom. But if we wanted to get more specific, now we see a shift, and since we broke below this in May, now what we're actually operating in is this lower, right? So you could totally be playing this bottom to top scenario on smaller time frames, right? Like I just buy and sit on gold and silver myself, but if you wanted to actually trade this stuff, this is another thing that you'd be looking at. But yeah, we're at 78, and again, there's this notion that when it goes above 80, that there's significant price action on gold, which it makes sense from just a basic supply and demand standpoint. I just didn't really see that in the charts myself, so maybe you see something differently. But let's go into gold now, okay? So here's the daily, and I've actually plotted out some lines now. Here's a little channel going all the way back to that same date. So what is that, July of 2000? Oh, yeah. It's actually, well, I'm on the 7th now, or excuse me, I'm on the 10th. So it is damn near a year ago, okay? And you see we broke below that, which is very significant, very significant. And again, to look at our horizontals is in the beginning of the year, the tail end of last year and the beginning of into 2018, we were just trekking through this, boom, 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 ping pong, top to bottom, top to bottom, top to bottom, right? And then finally, we broke below that in May, and then, okay, that acted as resistance, can't break above, which we can only test so many times, right? I keep telling you guys that. We can only test so many times a line, and it does one of two things, breaks up or breaks down. And we finally see that it broke down because it was failing, and it was just popping wicks. We weren't even getting bodies over this line. And so we break down, and we fall back down to this lower support, which coincides all the way back to December 11th, 2017, coincides all the way back to July 2017, we got a touch point in June, back to March, February, January. No, that's February. Is this January? Okay, no, this is all the way back to 2016. Acted as resistance back in November of 2016. And you could just keep going, which is really cool about gold and silver is you get so much data. So then going back to 2016, May of 2016, you've got that again, acting as support. Acting as support through this little section here in February. And it just goes on and on. You could just drill back, 5-10 years if you wanted to. And that price action has been supported. Okay, so it fell back to that number, 1236. And so, yeah, now what we're trekking in is we're trekking in a smaller, tighter groove, which I would say would be this is the top and this is the bottom, right? And since we broke below this, and this is a significant fib line as well, you can expect this to now act as what? Support, as it always has in the past. Well, it's acted as a significant line. So there's a couple different things we could do here. We could just fib. We could fib some different zones here, and we could get in on this one, which let's expand this out. Wait, where's the bottom? I got snap 2 on, so maybe I should shut that off. There we go. And you see, excuse me, kind of losing my voice a little bit. And you see what's going on here. So up top here, we were well above. No. Let me get rid of this. Let's do a trendy bendy. Let's bring that back. There we go. Okay, so at the top of the zone here, we're interacting with the 786, breaks down through the kind of golden zone here, keeps falling, and now there was heavy interaction around the 236, right, which is now what we're fighting, and we're trying to break above the 382 fib. Then 50%, that's a lot of people's entry on this smaller time frame, and then we're basically following big retracements. So we can start by fibbing, bigger time frames, bigger amounts of time, which don't really tell us that much for immediate price action. Let me flip this, hold on. It's not letting me pull it up. So we'll start here at the bottom. There we go. So we don't see much, right? Because we're basically going off of a zone from 3 months ago. Okay, so you see it tells us less and less data, but we still see these significant lines interacting with key fib lines. And I might not even have that 100% snap to the right zone. If we were to go to here, the actual wick, you see it actually fits with most of these lines now perfectly. Okay, and that's what we're looking for, is we're just playing around with these fibs to see, okay, what's this actually giving us here? So now let's do this one here, wick to wick. Oops. And we start to see more and more confluence. More and more confluence with our zones. So we got some of our lines lining up, 786-ish, which is why I don't put exacts on the number. Let's shut off the magnet, huh? Because sometimes it's like a $10, $5 range, and you'll see the price action with gold and silver is way slower, way more sleepy than Bitcoin, right? So it's like $2, $5, $10 increase is like huge in gold and silver, and with crypto it's like, oh, that was from 2 to 3 p.m. we saw that. So understand that your price action with gold and silver is way slower. Okay, so yeah, we've got interaction with the 236 now, right? And now we're trying to break through the 382, and so this is acting as the support for right now on the daily, and then we're trying to break through, and this is acting as the resistance on this micro rip here. And so the more that you play around with this, the more that you see that these zones are essentially just perfectly lining up. Okay, grab it a little bit higher. Let's see it there. We already did this one. So see, 236, that's acting as, I mean, we got a long way to go. Acting as resistance now. 382 just blew right through that. We attempted to come back up. So all of these fib lines are just key indicators of what's actually going on with the price action, right? So now let's, oops, get rid of this, redraw it. Yeah. Okay, here's a look at this again, lining up with the 50% line, this line here. Golden pocket right here. 786, we got interaction there. That's about where the 236 was on the other lines that I snapped. And so sometimes I just sit and kind of play around with the fib extension and the trend tool and see, because here's what we've got. We've got some patterns happening here. We've got this retracement happening, right? So even if we were to grab on a much longer time frame, which this is going back to December, bottom to top here. Come on, there we go. I'm gonna need to fix that. Snap on this line. There we go. But you see, we bounced off of this line, which was support all the way back from December. So we can expect that it's not going to break below this. 100% we can expect it's not going to break below this. But now, what are we coming up on? Well, we're facing resistance at the first key line here, 236. Okay? So based on this previous trend, we start to get some data. But what we can 100% expect is that it will retrace and it will pass through the 236, the 382, and the 50% line. It will 100% pass, and it will get somewhere up into this zone. Now, depending on what pattern theory you follow, we'll tell you, excuse me, we'll tell you if you're going to get to the 618, the 786, or whatever, right? Yeah, it's incredible to see the trends 100% duplicate, right? So we see it acted as support here, and then ran all the way up. And then we saw wicks touching this same top, right? So yeah, we can expect that it's gonna go back through the 236, 382, and it's gonna face heavier resistance around the 50%, and that's gonna be entry for a lot of people too, by the way, a lot of algo traders. And then it'll get somewhere up and retrace up to the 618 to the 786. Okay. So it'll get back up into this pocket here, which makes all the people that accumulated down here, makes it even a sweeter deal. So it's not a huge amount of money, especially in comparison to crypto, but you know, let's just look at what we're looking at. 6% and then 8%, right? So not bad. So if you accumulated down here, or even if you decided to accumulate now, today, what you'd be looking at, where you'd be putting your sells, is you'd start to put your sells at the 50%, sell a little bit, 618, sell a little bit, 786, sell a little bit. And if they never get filled, cool. And if they get filled, great, right? So that's how you'd kind of take that approach. But all of these, like, look, here's a much bigger one. So if we were back here in 2017, all you would do is you would just fib extension this, and that would have told you quite a bit of data for this second run here, right? So what do you know? It finally breaks out, right? Or excuse me, it breaks out here and then breaks down. And then this acted as support, just like it's acting as support now. So look at the macro breadcrumb here. So this long motion here, it was supported on the 236, just like we are here. And what did we see next? Ran all the way up. And so this broke above the 100% on the retracement there, right? Or did it? Hold on, let me look. No, there's the wick there. So it just broke it. It actually hit the same level. So it did 100% retracement as it bounced out of the 236. So algo trading and fib trading are so much so much easier to see in non-crypto markets, by the way. So it bounced out of the 236, which algo traders, they knew that. They saw that. This was their entry. They put their buys in here. And then they would have started to sell off probably at the 618, 786, and we got 100% retracement. So again, if we're just applying that pattern that we've already seen play out over the last year, if we apply that same pattern here, what are we looking at here? We're looking for it to hit right up here. Excuse me, right there. That's 100% retracement. So let's grab out our price range. 10%. 10% on that. So if you're accumulating, your asset grows 10% this year. Not bad, right? So way more significant to play out and look at the macro moves. And if you just look, I'm sure this second fib, I could adjust this a little bit. These lines should be a little bit closer together between the 786 on my second extension here and the 618 on the, so that should probably be a little bit closer. These lines will most likely overlap 50% right around this significance line that I drew. You guys seeing that? Another significance line, what do you know? Lining up, coinciding with the 618 on this one, and then there's nothing on this one, so it's in between. So that's that. That's gold. Silver, pretty similar. I've got some significant lines drawn out now. Excuse me. But it's the same thing I'm looking at. So I'm looking at, okay, we were running in a bigger channel here, and then it tightened up this year. So this year, look at the channel we've been running in. I mean, my God, you imagine how much money people are making off of this? Just fib this channel. Oops. Got the magnet on again. Let's just fib this channel. 0 to 1. And they're putting in all their buys and sells based on these algo numbers all year. All year, there's been people making a killing on silver because it's just following this channel. Look, since the beginning of the year, when we first entered into this zone, end of December, just up and down, top to bottom, top to bottom. Right, so here it is right here. So top to bottom. And what do you know? 236, tons of support, tons of price interaction. 382, same thing. 50%, same. Golden pocket. Interacting. Wicks back here. Touching into it. 786. So you see, if you're brand new to fibs, I got a tutorial on the channel. But there's less and less price action here. But this is where you put your sell-off points. 618, 786. You know, this is where a lot of people are putting their sell orders. Just sell a little bit off, sell all of it off. I mean, it's up to you. Okay, so now what's happened and why this is so significant is it just matches what we see on gold with us breaking through this right here. You see this this channel that we broke below. So now we've broken below that. Same thing here. So I don't have a you know, an ascending channel drawn on silver because I couldn't find one. But we've got this support line that has been active all year. Boom, boom. And then it breaks below. So it won't go lower than that. And there's a big support right here that it won't break below as well. Because if it would have, we'd be down here challenging it still. It'd look like Bitcoin, right? So Bitcoin, we're just playing this round robin around this line. Gold and silver are not doing that at all. Okay, so we've officially bounced out of that negative 236. 236 is always a very strong support, right? Watch the tutorial. So we bounced out of the 236. Now we're about to start interacting here soon with the 236. So I would still be playing the same channel. Let's get rid of this, get this out of here. But I'd still be playing the same channel, top to bottom, for the rest of the year. Because you really haven't gotten any reason in Confluence not to. So we broke below it, but we're already back in it. we're already back in it. Yeah, it's just cool. It's cool to plot out and play around with stuff that has higher time frames. You know, years and years and years of data. So, anyway, that's all I got for you guys today. A little bit longer. I apologize. I'm a little tired, so I'm like not on point. But hopefully, you guys got some value out of this. That's some more data on gold and silver. Bitcoin, like I said, it's not really doing much. So you see, look at this. You could just fib this all day. All the way back to 2016, these algo traders have just been making bank off of gold and silver. I think gold and silver are fairly easy to trade just because it's predictable. The suppression, the manipulation is predictable. They don't want the market to completely break down, so it doesn't. And yeah, it just supports and stays in these patterns. And these patterns are really easy to see when you kind of keep going back in time, right? So cool. Anyways, if you guys like what we're doing here on the channel, go ahead and subscribe, hit the bell notification. If you're watching a replay, hit the like button, place a comment, let me know what you think. Let me know what you're seeing. I'd love to see your charts too, trading view charts, if you guys chart at all. Post your trading view charts below. This replay will be up on the channel as soon as it's done processing, and you can check it out, bookmark it, save it for later. That's it for today, my friends. We will see you back tomorrow to go over some more charting. Bye.